Before we get started, a quick but very important disclaimer. I am not a licensed insurance agent or financial advisor. This presentation is for informational and educational purposes only. The world of insurance is complex and your individual needs are unique. While we've done extensive research to bring you the most accurate, up-to-date information possible, this video should not be considered a substitute for professional advice. Always consult with a qualified professional before making any financial decisions. Your financial well-being is paramount, so please do your own due diligence. You get that bill in the mail, or maybe it's an email notification that just ruins your morning. Your car insurance premium, and it went up. Again, for absolutely no reason you can think of. You didn't get a ticket, you didn't have an accident, you haven't even changed your address. Yet somehow you're paying more this year than you did last year. Sound familiar? If it does, you're not alone. In fact, a recent study found that the average American driver overpays for their car insurance by over $400 a year. $400. That's a new set of premium tires. That's a weekend getaway. That's money you are giving away for free to a massive corporation simply because the entire system is designed to be confusing, overwhelming, and just frustrating enough that you don't bother to switch. And that's the trap, isn't it? They bank on your inertia. They bombard you with ads featuring talking lizards and quirky salespeople, promising you savings in 15 minutes or less. But when you actually try to compare apples to apples, you're buried in an avalanche of jargon. Comprehensive collision, bodily injury liability, uninsured motorist coverage, PIP, MedPay. It feels like you need a law degree just to understand what you're buying. And what about the loyalty penalty? That's a real thing. It's a dirty little secret in the industry where some companies slowly raise the rates on their most loyal customers over time, betting that you won't go through the hassle of shopping around. It's infuriating, feels unfair, and it stops today. This video is your definitive guide. This is the antidote to the confusion. We are going to pull back the curtain on the entire US auto insurance industry. We're not just going to tell you who's cheap. Anyone can do that. We are going on a deep dive to answer the ultimate question. What is the absolute best auto insurance company for you? Not for your neighbor, not for your cousin, but for you, your car, your driving habits, and your wallet. Over the next series of segments, we are going to systematically dismantle the biggest players in the game. We've spent hundreds of hours analyzing customer satisfaction scores from J.D. Power, complaint data from the National Association of Insurance Commissioners, financial strength ratings from AM Best, and real-world customer reviews from thousands of drivers across all 50 states. We'll look at the giants: Progressive, Geico, State Farm, Allstate, the ones you see on every commercial break. We'll examine the companies that fly a little more under the radar, but have legions of devoted fans, like USAA and Amica. And we'll even explore the new age tech disruptors like Lemonade and Root that are trying to change the way insurance is done entirely. For each one, we're going to give you the unvarnished truth. The good, the bad, and the ugly. We'll tell you who has the best claims process when things go wrong, who has the most user-friendly app, and most importantly, who has the hidden discounts that could save you hundreds if not thousands of dollars a year. By the end of this journey, you will have a crystal-clear roadmap. You will be armed with the knowledge to confidently choose the right company, negotiate the best rate, and never, ever overpay for car insurance again. So let's start with the big question. What is the best auto insurance company? I'm going to tell you a secret right now. It's a trick question. There is no single best company for everyone. To pretend there is would be a lie. The best company for a 19-year-old student with a sports car in Los Angeles is going to be wildly different from the best company for a 55-year-old couple with a perfect driving record and 2 minivans in rural Ohio. The real question isn't who is the best, but who is the best for my specific situation? And to answer that, we have to first agree on what best even means. It's not just about finding the cheapest quote online. That's the number one mistake people make. They shop on price alone, and they get burned when they actually need their insurance to work. Best is a balance of 3 critical pillars. Think of it as a triangle. On one corner you have price, on the second you have coverage, and on the third you have service. You need all 3 to be strong. If one is weak, the whole thing collapses. Let's break that down. First, price. This is the most obvious one. It's the number you see on your bill every month or every 6 months. But a low price today doesn't mean a low price forever. Is this a teaser rate that's going to skyrocket in 6 months? Does the company have a history of frequent unexplained rate hikes? Does the low price come at the cost of gutting your coverage, leaving you dangerously exposed? We're not looking for cheap. We're looking for value. The best price for the most robust protection. Second, coverage. This is the product you are actually buying. It's the legal contract that says what the company will and will not do for you in the event of an accident. It's easy to get a cheap quote by setting your liability limits to the state minimum. But is that enough to protect your house, your savings, your entire financial future if you cause a serious accident? We're going to show you what coverages are absolutely essential, which ones are nice to have, and which ones you can probably skip so you're only paying for the protection you truly need. And finally, the most important pillar of all, service. This is the moment of truth. An insurance policy is just a promise. Service is how well that company keeps its promise when you need them most. When you're standing on the side of the road after a crash, shaken and stressed, how easy is it to file a claim? Is their app intuitive? Can you get a real, helpful human on the phone? And most critically, do they pay their claims fairly and quickly? Or do they fight you every step of the way, trying to lowball you and delay payment? A cheap policy from a company with terrible service is one of the worst financial products you can own. It's like buying a fire extinguisher that's filled with water. It looks right, but when you need it, it's worthless. So our mission is to find the companies that excel in all three areas. A fair price, solid coverage, and outstanding customer service. We'll score them, we'll rank them, and we'll give you our unfiltered opinion on where they shine and where they fall short. We're going to begin this deep dive with one of the most recognizable names in the entire industry. A company that spends over $1 billion a year on advertising to convince you they can save you money. A company that has become a household name thanks to a relentless barrage of clever marketing. We're starting with the second largest auto insurer in the United States, Geico. Is the gecko telling the truth? Can 15 minutes really save you 15% or more on car insurance? And more importantly, what happens after you sign up? Is their famous low price just a bait and switch for subpar service and weak coverage? Let's find out. To answer that, we have to go back. Way back. Not to the dawn of the internet, but to the height of the Great Depression. The year is 1936. A man named Leo Goodwin Sr., a successful but frustrated accountant at an insurance company in Texas, has a radical idea. He looks around and sees that most insurance companies treat all drivers the same. A quiet, careful government clerk pays the same rates as a traveling salesman who's on the road 300 days a year. To Goodwin, this made no sense. He believed that a specific group of people, government employees, were a much lower risk. They were stable, reliable, and statistically they got into fewer accidents. So he thought, what if I create an insurance company just for them? And what if I cut out the middleman entirely? No agents, no commissions. I'll deal with my customers directly through the mail. By targeting a low-risk group and eliminating the sales agent's cut, he could offer dramatically lower prices. He and his wife, Lillian, worked tirelessly at their kitchen table, founding the government employees' insurance company. You can see it now, right? Oh, a Geico. It wasn't a clever marketing name. It was a literal description of their business plan. That direct-to-consumer model is the secret sauce. It's the engine that powers that famous slogan. When you call Geico or go to their website, you're not paying for a local agent's office, their staff, or their commission. You're going straight to the source. This streamlined process is how they can genuinely give you a quote in minutes. So, can 15 minutes really save you 15% or more? The answer is yes, it absolutely can. For many people, it saves them even more. Geico's entire structure is built for speed and low overhead, and they pass a portion of those savings on to you. It's not a marketing gimmick. It's the core of their 70-plus-year-old business model. But that brings us to the much more important question, the one that really matters when you're sitting on the side of the road, watching smoke pour from your hood. Is that low price a gateway to a nightmare claims process? This is where the picture gets a lot more complicated. Let's look at the data. J.D. Power, one of the most respected names in consumer research, releases an annual U.S. auto claim satisfaction study. 4 years, Geico has hovered right around the industry average. Not at the top, but not at the bottom either. They consistently score well on things like the initial reporting of a claim and the ease of using their digital channels. Their mobile app is frequently praised. You can file a claim, upload photos of the damage, and get the process started in minutes, right from your phone. For a simple fender bender, where fault is clear and the damage is straightforward, many customers report a smooth, fast, and painless experience. The system works exactly as advertised. That's the good news. The bad news emerges when things get messy. Dig into the complaints filed with the National Association of Insurance Commissioners, or NAIC. Here, Geico's complaint ratio is often higher than some of its major competitors. The common themes in these complaints are illuminating. Customers frequently report feeling rushed by adjusters. They talk about initial settlement offers that are far too low to cover the actual cost of repairs, forcing them into a long and frustrating negotiation process. And when a claim involves significant injuries or a dispute over who was at fault, the efficient, app-based system can suddenly feel cold and impersonal. You're no longer dealing with a helpful algorithm. You're dealing with a massive corporation whose primary financial incentive is to pay out as little as possible on every claim. That friendly gecko on your TV isn't the one who calls to tell you the custom wheels on your wrecked car aren't covered. This reveals the fundamental trade-off of the Geico model. By removing the local agent, you gain speed and save money on your premium. But you also lose an advocate. When you have a dedicated agent with a company like State Farm or a local independent broker, you have a human being whose job includes helping you navigate the claims process. They can explain your coverage, go to bat for you with the home office, and provide a personal touch. With Geico, your advocate is you. You need to be prepared to read your policy carefully, document everything, and stand your ground if you believe you're being treated unfairly. So, is it a bait and switch? No, not in the traditional sense. You are getting what you paid for. A low-cost policy from a company that has optimized for efficiency above all else. The problem is that many people don't fully understand what they are giving up in exchange for that lower price until they actually need to use the product. There's another piece to the Geico puzzle that explains both its success and its behavior. And that piece is a name you definitely know: Warren Buffett. In the 1950s, a young unknown investor named Warren Buffett discovered this small, peculiar insurance company and was so impressed by its business model that he put more than half of his net worth into it. Decades later, in 1996, his company Berkshire Hathaway bought the remainder of Geico, taking it completely private. Why was one of the greatest investors in history so obsessed with a car insurance company? The answer is a single magical word: float. Float is the money that insurance companies collect in premiums before they pay it out in claims. Think about it. You pay Geico your premium every month, but you might not have an accident for years or ever. Geico gets to hold on to your money, and the money of millions of other customers, and invest it for their own profit. For an investor like Warren Buffett, Geico isn't just an insurance company. It's a massive, self-funding investment vehicle. It generates a mountain of cash that he can then use to buy other businesses. This is the financial genius behind Geico. It also helps explain their corporate mindset. The company is a finely tuned machine designed to do two things: attract as many customers as possible with low prices, and manage the outflow of cash, the claims, as stringently as possible to maximize that float. Your individual claim is just one tiny variable in a massive financial equation. So what's the verdict on Geico? It's a fantastic option for a specific type of customer. If you are a safe driver with a clean record, if you are comfortable managing your policy and potential claims through an app or a call center, and if your primary goal is to find the lowest possible premium, Geico is one of the best choices you can make. The savings are real, and the technology is efficient. However, if you value personal relationships, if the idea of negotiating a complex claim on your own is intimidating, or if you have a history of accidents or specialized coverage needs, the Geico model might leave you feeling frustrated and alone when you need help the most. The gecko is telling the truth about the savings. He just isn't telling you the whole story about what you might have to give up to get them. The entire Geico model is built on removing the human agent from the equation. But what if you believe that's the most important part? What if you don't want to deal with an app or a call center in another state when your world has been turned upside down by a serious accident? What if you want to walk into a local office and look a person in the eye? Well, for that, you need a completely different kind of company. A company that built an entire empire not on a gecko, but on the simple promise of being a good neighbor. And that's exactly where we're going next. State Farm. For nearly a century, those two words have been synonymous with insurance in America. Founded in 1922 by a retired farmer named George Metchelly, State Farm wasn't built on complex algorithms or a massive call center. It was built on a simple, almost radical idea for its time, that farmers who drove less and had fewer accidents than city folk shouldn't have to pay the same high rates. He built a company for a specific community, with a model based on trust and local representation. That foundation, that DNA, is still the core of what State Farm is today. It's the largest auto insurer in the United States, Not because it's the cheapest, but because it perfected the one thing a website or an app can never truly replicate: a human relationship. The entire State Farm empire rests on the shoulders of its nearly 19,000 agents. These aren't just salespeople in a call center. These are small business owners in your town. They're the people who sponsor the local Little League team, who you see at the grocery store, whose kids might go to the same school as yours. And when you have a State Farm policy, you don't just have a policy number. You have an agent. You have a name. You have a direct phone number to a person whose livelihood depends on keeping you happy. This is the fundamental difference, the great dividing line in the insurance world. With a direct-to-consumer company like Geico, your primary relationship is with the brand itself, facilitated by a website or a largely anonymous 1-800 number. With State Farm, your relationship is with a person, and that changes everything. Imagine this scenario. You're in your first ever serious car accident. You're shaken up, standing on the side of the road, car smoking, lights flashing. Your heart is pounding. What's your first move? With a direct insurer, you pull out your phone, open an app, and start tapping through menus trying to figure out how to file a claim. You're uploading photos, typing in details, trying to remember what your deductible is. You're on your own. Now, imagine that same scenario with a local State Farm agent. You make one call. Not to a call center, but to Sarah, the agent you sat down with 6 months ago. She knows you. She remembers you were worried about your teenage son starting to drive. She says, "Don't worry, I've got this. First, is everyone okay? Second, here's what we need to do next." Suddenly, you're not alone. You have an advocate, a guide, a professional who is literally invested in helping you navigate the single worst day you've had in years. That feeling, that sense of security is what State Farm sells. It's not just insurance, it's peace of mind. And for millions of Americans, that is worth paying a premium for. This agent model excels when life gets complicated. Buying your first home and need to bundle your auto insurance for a discount? Your agent can walk you through the options, explaining what liability coverage you really need for your new property. Starting a small business and need to insure a work vehicle? Your agent understands the local market and can advise you on commercial policies. You're not just a data point in a system. You're a client with a life story, and the agent's job is to find the right products to protect that life. And when it comes to claims, the satisfaction scores often reflect this difference. J.D. Power consistently ranks State Farm highly for customer satisfaction in the claims process. Why? Because when you have a problem, you have a human being to hold accountable. You're not just being transferred from one department to another. You can call your agent and say, "Hey, what's the status of my claim?" And they can go to bat for you. They work within the State Farm system to get you answers. This human element in a cold, bureaucratic process is the company's superpower. But, and this is a very big but, that superpower comes at a cost. A very literal cost. Those 19,000 agents have offices to run. They have staff to pay. They earn commissions on the policies they sell. All of that overhead, all of that infrastructure, is baked into the price of your premium. State Farm is rarely, if ever, the cheapest option on the market. That's not their game. They are competing on service, not on price. So the first and most critical question you have to ask yourself is, how much am I willing to pay for that peace of mind? For that personal relationship? Furthermore, the agent model creates a massive variable, the quality of your agent. For every incredible, knowledgeable, and empathetic agent out there, there's another who is less responsive, less experienced, or just not a good fit for you. Your entire State Farm experience can be a dream or a nightmare based entirely on the one person you're assigned to in your local area. You might get the agent who calls you on your birthday, or you might get the one who never returns your calls. It's a roll of the dice in a way that a standardized, centralized system isn't. There's also the question of speed and convenience in the digital age. While State Farm has drastically improved its app and website, its core business model is not built for the person who wants to get a quote, buy a policy, and file a claim at 2 in the morning without ever speaking to a human. The process can feel a bit more deliberate. It often involves a phone call, or even an in-person meeting. For the digitally native consumer who values efficiency above all else, this can feel slow and old-fashioned. So, who is State Farm for? It's for the person who sees insurance not as a commodity, but as a relationship. It's for the family with multiple policies, home, auto, life, who wants a single trusted advisor to manage it all. It's for the individual who feels overwhelmed by the jargon and complexity of insurance and wants someone to sit down and explain it to them in plain English. It's for the person who, when disaster strikes, wants their first call to be to a familiar voice, not an automated menu. If you believe that you get what you pay for, and you are willing to pay a bit more for a premium level of personal service and the stability of the nation's largest insurer, then State Farm is an incredibly compelling choice. It represents the traditional pillar of the insurance world. Stable, reliable, and deeply human-centric. But this raises a fascinating question. We've seen the two extremes, the lean, mean digital-first machine of Geico, and the sprawling relationship-based empire of State Farm. One bets on technology and price, the other bets on people and service. What if you want the best of both worlds? What if you want the slick digital tools and competitive pricing of a direct insurer, but also the flexibility and options that come from having more choices? What if a company gave you the power to compare rates from different carriers, and even let you name your own price? Well, that's the billion-dollar puzzle that a company with a very forward-thinking name decided to solve. And their solution changed the entire industry. That company was founded in 1937 by two lawyers, Joseph Lewis and Jack Green. And they named it with a purpose. They called it Progressive. Their idea was so simple, yet so radical for its time, that it completely upended the established order. See, back then insurance was a club for good drivers. If you were young, had a less than perfect record, or were considered in any way a higher risk, you were basically out of luck. The big, established companies didn't want your business. Lewis and Green saw this not as a problem, but as a massive untapped market. They decided to build a company specifically for the drivers everyone else rejected. They believed that everyone deserved to be protected. That was their first progressive move, and they were just getting started. While other companies operated from intimidating downtown towers, Progressive did something different. They invented the first ever drive-in claim service. Think about how revolutionary that was. After an accident, instead of waiting days or weeks for an adjuster to come to you, you could just drive to them, get an estimate, get the process started, and get on with your life, all in the same afternoon. It was a business model built around the customer's convenience, not the company's. But their biggest disruption to the financial side of the industry was even more profound. They were the first major insurer to allow customers to pay for their policies in installments. Before this, you often had to pay your entire 6-month or year-long premium all at once. For millions of working-class American families, that lump sum was an impossible barrier. By introducing monthly payments, Progressive didn't just sell insurance. They made it accessible. They democratized road safety. This pattern of looking at what the industry did and intentionally doing the opposite became their DNA. So when the internet began to emerge, who do you think was first in line? While the legacy giants were still running their businesses on paper files and fax machines, Progressive launched a website in 1995. By 1997, they became the first major insurer in the world to let you buy a car insurance policy online, from start to finish. They saw the future, and they ran towards it while everyone else was still trying to figure out what a dial-up modem was. This brings us back to that name your price tool. It was the perfect fusion of their customer-centric philosophy and their tech-savvy approach. And it was a work of marketing genius. It wasn't magic. You couldn't just say $1 and get a policy. But what it did was flip the entire script. Instead of the insurance company telling you, "Here's the price for this package, take it or leave it," Progressive asked, "What's your budget?" You'd enter the amount you wanted to pay per month, and their system would instantly show you all the different combinations of coverage, liability, collision, comprehensive, that you could get for that price. Put the power and the feeling of control directly into the hands of the consumer. It turned a confusing and frustrating process into a simple, transparent choice. But then they did something that made every other CEO in the industry think they had lost their minds. They started showing you their competitors' rates right alongside their own. Can you imagine the boardroom meeting where that was proposed? So, our new strategy is to actively advertise for our competition on our own website. Sounds like corporate suicide, but it was the most confident, radically transparent move the industry had ever seen. Progressive made a bet. They bet that by being the only one willing to show you the whole picture, even when they weren't the cheapest, they would earn your trust. And trust is a currency far more valuable than a few saved dollars on a 6-month policy. They knew that sometimes they would lose a customer to a cheaper rate. But that customer would never forget who was honest with them. That customer would tell their friends. And when it was time to renew, they'd come back to Progressive first because they were treated like a smart consumer, not a sales target. This philosophy needed a face, personality, and in 2008 they found it. Not in a slick celebrity or a talking animal, but in a relentlessly upbeat, slightly quirky cashier with a red lipstick smile and a crisp white apron. Her name was Flo. Flo wasn't just a character. She was the physical embodiment of Progressive's entire brand identity. She worked in a bright, clean, welcoming superstore, a metaphor for the choice and comparison that Progressive offered. You didn't have to go to some stuffy agent's office. You could come to this friendly, fictional place where everything was neatly packaged and easy to understand. Flo humanized a cold, complex product. She took the fear and confusion out of buying insurance and replaced it with a sense of helpful guidance. The campaign was a phenomenon. It transformed Progressive from just another insurance company into a household name, a cultural touchstone. But Progressive knew that a great mascot wasn't enough. The innovation had to continue, and their next big idea would be their most personal and most controversial yet. They called it Snapshot. This was the dawn of telematics, or usage-based insurance. The idea was simple. The safest drivers should pay the least. But how do you really know who the safest drivers are? You watch them. Snapshot was a small device you plugged into your car's diagnostic port, or later, just an app on your phone, that monitored your actual driving habits. It tracked things like how often you slammed on the brakes, how rapidly you accelerated, how many miles you drove, and what time of day you were on the road. This was the ultimate evolution of their founding principle. They started by insuring drivers based on their perceived risk category. Now, they could insure you based on you. Your rate would no longer be determined just by your age, your zip code, or your credit score. It would be determined by your actions behind the wheel. For good drivers, this was incredible news. Finally, a way to be rewarded for their caution and skill, leading to discounts of up to 30%. It was the ultimate personalized premium. So what does this all mean for you? Progressive's strengths are crystal clear. They are a technology-first company with some of the best online tools and mobile apps in the business. If you value convenience and the ability to manage your policy without ever having to speak to a human, they are an absolute top contender. Their commitment to transparency, showing competitor rates, builds a level of trust that is hard to match. And for the right kind of driver, programs like Snapshot can offer significant savings that you simply can't get from more traditional insurers. They are often very competitive on price, especially for drivers who might have a blip or two on their record. However, no company is perfect. That relentless focus on technology and direct-to-consumer sales can have a downside. While their claims process is often rated highly for its digital efficiency, their overall customer service scores can be a mixed bag. If you're someone who values having a dedicated local agent you can call or visit, the Progressive model might feel impersonal. And the Snapshot program, while great for some, can feel invasive to others. There's the privacy concern of a company monitoring your every move in the car. Plus, it's not a guaranteed discount. A few weeks of city driving with lots of stop-and-go traffic could actually flag you as a risky driver, potentially working against you. Progressive's story is one of a perpetual disruptor. They forced a centuries-old industry to embrace technology, to become more transparent, and to finally start putting the customer's needs first. They are a titan of innovation, but they aren't the biggest. Not by a long shot. There's another company out there, one that took the direct-to-consumer model and supercharged it with an advertising budget that dwarfs almost any other brand on earth. A company whose mascot is arguably even more famous than Flo, and whose promise of saving you money is delivered in 15 seconds or less, over and over and over again. They became the second-largest auto insurer in the country not just by being clever, but by being absolutely relentlessly everywhere. But what exactly is the machine behind the gecko? To understand Geico, you have to understand its origin story, because it's not just a clever marketing company. It's a fundamental disruption of the entire insurance industry. And it all started not in some Silicon Valley garage but in the midst of the Great Depression. In 1936, a husband and wife team, Leo and Lillian Goodwin, had a deceptively simple idea. Back then, insurance was sold almost exclusively through agents. You met a guy, you talked, he filled out paperwork, and he took a commission. The Goodwins saw a flaw in this model. They realized that certain groups of people were statistically safer drivers than the general public. Specifically, government employees and high-ranking military officers. They were stable, responsible, and less likely to get into accidents. So they thought, what if we cut out the middleman? What if we bypass the agent, sell directly to this low-risk group, and pass the savings from both the lower risk and the eliminated agent commission directly to the customer? That's it. That was the revolutionary idea. Government Employees Insurance Company, GETO. It was a direct-to-consumer business model decades before the internet made that a buzzword. It was a niche strategy that worked beautifully. For decades, Geico grew steadily, a well-run but relatively quiet company serving its specific slice of the market. And then, one of the smartest investors in history noticed them. In the early 1950s, a young, ambitious student at Columbia University named Warren Buffett was studying under the legendary Benjamin Graham, the father of value investing. Graham was actually the chairman of Geico's board. Buffett became obsessed with the company. He saw something others didn't: a financial superpower in disguise. He saw a company with two incredible advantages. First, that direct-to-consumer model that kept costs incredibly low. And second, something far more powerful: a concept called float. Now, float is the secret sauce of the insurance world, and it's the key to understanding why Buffett eventually had his company, Berkshire Hathaway, buy all of Geico. Think about it. You pay your insurance premium today, but you might not have an accident for months, years, or ever. That time between Geico receiving your money and potentially paying it out for a claim? That's the float. It's a massive pool of cash that doesn't belong to Geico, it belongs to the policyholders, but Geico gets to hold it and, more importantly, invest it for its own profit. Buffett saw Geico as a company that not only had a brilliant, low-cost business model, but also generated billions of dollars in this investment float. He called it a financial masterpiece. He started buying the stock, and eventually, in 1996, Berkshire Hathaway acquired the entire company. With the near-limitless capital and long-term vision of Warren Buffett behind it, Geico was unleashed. They took that original niche idea, selling directly to low-risk customers, and blew it up for the masses. The target was no longer just government employees, it was everyone. And their weapon of choice was advertising. The gecko, the caveman, the 15 minutes could save you 15% or more tagline. It was a full-scale assault on the American consciousness, fueled by a massive, massive budget. So what does this mean for you, the consumer, today? The entire Geico value proposition still hinges on that original 1936 idea: efficiency. By removing the independent agent from the equation, they remove a significant layer of cost. Their whole system is built for speed and volume. Their website and mobile app are, by most accounts, fantastic. They are streamlined, easy to use, and designed to get you from a quote to a policy in minutes, with minimal human interaction. If you are a self-sufficient, digitally savvy person who just wants a standard policy for a standard car with a clean driving record, Geico can be incredibly compelling. You can get a quote at midnight, file a claim from your phone by uploading pictures, and manage your policy without ever having to speak to a person. It is the Amazon of car insurance. Fast, convenient, and often very competitively priced. This is Geico's strength. They are built for the straightforward. For the driver who fits neatly into their algorithm, the savings can be real and substantial. Their underwriting process is a finely tuned machine, sorting millions of drivers into risk pools and spitting out a price. If you're a good driver in a safe car living in a low-risk zip code, you are their ideal customer, and they will likely reward you with a very attractive rate to get your business. And with the backing of Berkshire Hathaway, you know they have the financial stability to pay out claims. They aren't some fly-by-night operation. They are a pillar of the financial world. But here's the paradox of the Geico model. The very thing that makes them great for so many people, that lack of a human agent, is also their greatest potential weakness. Insurance is simple when you're just paying your bill. It becomes incredibly complex and emotional the moment you actually need it. After an accident, you're not just dealing with a bent fender. You're dealing with stress, potential injuries, and a confusing process. This is where the absence of a dedicated agent can be felt most acutely. When you call Geico's claims department, you're not calling your agent. You're calling a massive call center. The person you speak to on Monday might not be the person you speak to on Wednesday. You might get a fantastic, empathetic, and efficient claims handler. Or you might not. The customer service experience at Geico is notoriously inconsistent. It's the #1 complaint you'll find in online reviews. For every person who says their claim was handled flawlessly, there's another who tells a story of unreturned phone calls, conflicting information from different representatives, and a frustrating impersonal process. You are a policy number in a massive system, and while that system is incredibly efficient for standard, low-cost transactions, it can feel cold and bureaucratic when your life has been turned upside down. There is no one person who is your advocate within the company, who knows your history and is fighting for you. You have to be your own advocate. This is the fundamental trade-off. Are you willing to trade the potential for personalized service, and a guiding hand during a crisis for a lower monthly premium? For many people, the answer is a resounding yes. They'll take the savings and bet that they'll never have a major complicated claim. They're comfortable navigating the system on their own. But if you're someone who wants to ask questions, who wants advice on whether to add a teenage driver, or how a new car will affect your rates, or who simply wants the peace of mind of knowing there's a specific person to call when things go wrong, Geico's model might leave you feeling adrift. Furthermore, their business is built on acquiring new customers with attractive introductory rates. This is a common industry practice, but it can feel like a bait and switch when you sign up for a great price, only to see it creep up at every 6-month renewal, even if you haven't had an accident or a ticket. They bet that the hassle of shopping around again will be enough to make you just accept the small increase over and over again. So Geico is a titan, an innovator, and a testament to a brilliant business model. It's a fantastic choice for the independent, price-conscious consumer, with a clean record and straightforward insurance needs. It offers convenience, speed, and often significant savings. But it is not a one-size-fits-all solution. It demands that you be a proactive, informed consumer. The promise of saving 15% or more is real, but it comes with an implicit understanding. You're the one in the driver's seat in every sense of the word. And that brings us to their biggest rival. A company that took a completely different path to the top of the insurance world. A company that doesn't just sell insurance, but also banking and mutual funds. A company that built its empire not on a quirky mascot, but on the idea of being a good neighbor. State Farm. The name itself sounds solid, dependable, almost agricultural. And that's no accident. The story of State Farm begins not in a bustling city boardroom, but in the heart of the American Midwest, with a retired farmer and insurance salesman named George Jacob Metchelly. GJ, as he was known, wasn't a slick numbers guy like Leo Goodwin. He was a man of the soil, and in 1922, he saw a fundamental injustice in the way insurance was being sold. Back then, auto insurance was a one-size-fits-all product. A farmer in rural Illinois who drove his truck a few miles a day on empty country roads paid the exact same premium as a taxi driver navigating the chaotic streets of Chicago. Metchelly knew this was wrong. He knew from his own experience that farmers and rural drivers were safer. They had fewer accidents. They were a lower risk. So what was his big idea? It was breathtakingly simple. Charge people a rate that actually reflects their risk. He founded the State Farm Mutual Automobile Insurance Company with a bedrock principle: to offer low-cost auto insurance to the farmers of Illinois. It was a niche, but it was a niche built on fairness, and it exploded. But the real genius of State Farm, the thing that would define its identity for a century and set it on a collision course with Geico's philosophy, wasn't just who they insured, but how they insured them. While Geico would later build an empire on removing the middleman, Metchelly built his by perfecting him. He envisioned a network of dedicated agents, not just salespeople, but pillars of their communities. These weren't just people you called to buy a policy. They were the people you saw at the local diner, the person whose kid played on the same little league team as yours. They were, in a word, neighbors. This agent-centric model became State Farm's superpower. In the aftermath of an accident, when you're shaken, confused, and vulnerable, the last thing you want to do is navigate an endless phone tree or chat with a bot. You want to talk to a person you know, a person whose job it is to have your back. State Farm's promise was that you could pick up the phone and call your agent, a specific human being, who would guide you through the chaos. This focus on personal relationships built a level of trust and loyalty that a direct-to-consumer model could only dream of. It was a high-touch, human-centered approach in an industry that was becoming increasingly impersonal. From this foundation, State Farm began its methodical expansion. It started with auto insurance for farmers, then expanded to non-farmers, then branched out into homeowners insurance and life insurance. The strategy was clear. If we can be the trusted good neighbor for your car, why not for your house? Why not for your family's future? Each new product was another thread weaving State Farm deeper into the fabric of its customers' lives. But the truly ambitious move came in 1999, when State Farm opened its own bank. This was a game changer. Suddenly, your good neighbor could not only insure your car and home, but also handle your checking account, your mortgage, and your car loan. They added mutual funds and other financial products, completing the transformation from a simple insurance company into a full-fledged financial services Goliath. Their goal was to be the only number you needed to call for almost any major financial decision in your life. This created an incredibly sticky ecosystem. When your car, home, life, and bank account are all under one roof, the hassle of switching even one of those services becomes immense. It was a brilliant strategy for customer retention. So what are the tangible benefits of this good neighbor model for you, the consumer? First and foremost is the personal service. If you value having a dedicated professional you can call or visit in person to discuss your coverage, ask questions, and guide you through a claim, State Farm is arguably the gold standard. A great State Farm agent can be an invaluable advisor, helping you navigate the complexities of insurance and ensuring you're not under or overinsured. Second, the bundling is a massive draw. Because they offer such a wide array of products, auto, home, renters, life, even banking and pet insurance, their multi-policy discounts can be substantial. For many families, the convenience and savings of having everything in one place, managed by one agent, is a powerful value proposition. And finally, there's the sheer stability. State Farm is a financial behemoth, consistently receiving top marks for financial strength from rating agencies like AM Best. When you pay your premiums, you can be confident that they have the capital to pay out your claim no matter how large. However, the good neighbor model is a double-edged sword, and its weaknesses are just as significant as its strengths. The biggest and most obvious downside is cost. That entire nationwide network of agents in physical offices with support staff costs a fortune to maintain, and that cost is passed directly on to you in your premiums. State Farm is very rarely the cheapest option on the market. In a head-to-head quote battle with a lean direct-to-consumer company like Geico, State Farm will often be hundreds, if not thousands of dollars more expensive per year for the same coverage. You are explicitly paying a premium for that personal service. The second major weakness is the inconsistency of the agent experience. State Farm agents are technically independent contractors. This means the quality of service can vary dramatically from one office to the next. A fantastic agent can make your life 1,000 times easier, but a subpar, unresponsive, or inexperienced agent can turn a simple claim into an absolute nightmare. Your entire State Farm experience is filtered through the lens of one individual. And if that individual isn't great, the good neighbor promise completely falls apart. You're not just choosing a company, you're choosing a specific person to manage a critical part of your financial life. Finally, while they've been improving, State Farm has historically lagged behind competitors in digital innovation. Companies that built their business online from the ground up often have slicker, more intuitive apps and websites. While State Farm's digital tools are perfectly functional for paying bills or filing a basic claim, they can sometimes feel a bit more cumbersome than those of their more tech-focused rivals. So, who is State Farm for? State Farm is for the relationship-driven consumer. It's for the person who wants a one-stop shop for their major financial needs and is willing to pay more for the peace of mind that comes with having a dedicated, local professional in their corner. It's for someone who finds the idea of navigating a complex claim through a call center daunting and would rather have a familiar face to guide them. If your priority is service and a long-term relationship over rock-bottom prices, State Farm is a top-tier contender. It represents one clear, powerful, and deeply traditional philosophy of what an insurance company should be. But it's not the only one. We've seen the government-focused upstart that cut out the middleman to slash prices. We've seen the community-focused giant that perfected the middleman to build relationships. But there was another revolution brewing, one that wasn't about who you were or who you knew. It was about data. It was about using the power of computing and statistical analysis to predict risk with terrifying accuracy. A company that didn't just want to sell you a policy, but wanted to plug a device into your car to watch how you drive. A company that built its brand on transparency by showing you its own prices right alongside its competitors. A company that armed itself not with a gecko or a good neighbor, but with a perky, energetic woman in an all-white uniform. Her name is Flo, and in 2008, she walked into the pristine, brilliantly lit superstore of insurance and changed advertising forever. But the company she represents, Progressive, had been changing the insurance game for 70 years before she ever put on that white apron. Progressive's story isn't about a friendly neighbor or a talking animal. It's the story of a relentless, data-obsessed innovator that forced an entire industry to look in the mirror. Founded in 1937 by Joseph Lewis and Jack Green, Progressive wasn't created to be the biggest or the friendliest. It was created to be the smartest. Their initial niche was insuring non-standard or high-risk drivers, the very people other insurance companies turned away. This wasn't a charity project. It was a calculated business decision. They believed that by using better data and more accurate risk assessment, they could profitably insure a market nobody else wanted. From its very first day, Progressive was a company built on analytics, not just averages. This data-driven DNA led to a series of quiet revolutions that you probably take for granted today. In the 1970s, while you still had to wait for an adjuster to come to your house or a body shop, Progressive introduced the world's first drive-in claims service. Got in a wreck? Just drive your car to them. They'd assess the damage, write you a check, and get you back on the road, sometimes in under an hour. It was a radical idea that put customer convenience at the center of the claims process, a notoriously inconvenient experience. Then they did it again. They became the first major insurer to introduce 24/7, 365-day-a-year claims reporting. Before this, if you had an accident at 10 p.m. on a Friday, you were likely waiting until Monday morning to even speak to someone. Progressive said, "An accident doesn't care what time it is, so neither should we." These weren't just marketing gimmicks. They were fundamental shifts in the customer relationship, powered by a willingness to invest in technology and infrastructure that their larger, more traditional competitors were slow to adopt. But their biggest gamble came with the dawn of the internet. In 1997, a time when most companies were just figuring out what a website was, Progressive became the first major insurer in the world to launch a site that allowed customers to buy a policy entirely online. This was a direct assault on the agent-based model that State Farm and Allstate had perfected. Progressive was betting that a new generation of consumers would value convenience and direct control over a personal relationship with an agent. It was a bet that paid off handsomely. This online-first mentality led to their most audacious and defining feature, the price comparison tool. In the early 2000s, Progressive started showing customers not only their own rate, but the rates of their top competitors right on their own website. Think about the sheer confidence that takes. It's like walking into a Coke factory and seeing a vending machine that also sells Pepsi. The psychological genius of this move cannot be overstated. It instantly created a level of trust that no amount of advertising could buy. Even if Progressive wasn't the cheapest option in that moment, the customer walked away thinking, "Wow, they were honest enough to show me that. I trust them." It reframed the entire shopping experience. Progressive wasn't just selling you a policy. They were helping you find the right policy, even if it wasn't theirs. This transparency became their brand, and it perfectly positioned them for the rise of the internet-savvy, price-conscious consumer. And just when you thought they couldn't get more personal, they did. They introduced Snapshot. This was the culmination of their decades-long obsession with data. The premise was simple and revolutionary. Your insurance rate shouldn't just be based on who you are, your age, your zip code, your credit score. It should be based on how you drive. The small telematics device, which later became an app on your phone, tracked your actual driving habits. Hard braking, rapid acceleration, late-night driving, and total mileage. Good. Safe drivers were rewarded with significant discounts. Bad drivers, well, they weren't. Snapshot fundamentally changed the insurance contract. It was no longer a static agreement based on demographic data. It was a dynamic, living partnership between you and the company. You were now in direct control of your own rate. Drive safer, pay less. It was the ultimate expression of their founding principle, to accurately price risk. Of course, this raised privacy concerns for some, a debate that continues today. But for millions of drivers, the potential savings were too good to ignore. It was another disruption, forcing the entire industry to follow suit with their own usage-based insurance programs. With all this innovation, drive-in claims, 24/7 service, online sales, price comparisons, usage-based insurance, Progressive had the product. They had the technology, but they lacked a soul. They needed a face. In 2008, they found one. Flo, the relentlessly cheerful and helpful insurance clerk, was an instant cultural phenomenon. She wasn't a celebrity spokesperson. She wasn't an animated mascot. She was a character, brought to life by comedian Stephanie Courtney. The Superstore concept was brilliant. It took the intangible, boring product of insurance and put it in a clean, brightly lit retail environment, with products on the shelf in boxes. Flo wasn't just selling you insurance. She was helping you shop for it. She demystified the process. She wielded her Name Your Price tool like a magic wand, showing customers they had the power to customize their coverage to fit their budget. Flo became the human embodiment of everything Progressive was trying to be: helpful, transparent, tech-savvy, and a little bit quirky. The campaign's consistency and longevity have been astounding. While other brands cycled through mascots and slogans, Flo remained. She became a trusted, familiar face in a sea of confusing options, and she propelled Progressive's brand recognition into the stratosphere, putting them on equal footing with the giants they had been disrupting for decades. So, who is Progressive for? Progressive is for the modern empowered consumer. It's for the person who wants to be in the driver's seat, both literally and figuratively. It's for the driver who is comfortable with technology and believes their good habits should be rewarded. It's for the shopper who values transparency and wants to compare all their options in one place. And because of their roots, they often remain a competitive option for drivers who may have a blemish or two on their record. However, that relentless focus on data and technology can sometimes come at the expense of the human touch. While their online tools are best in class, their customer service ratings can be a mixed bag, sometimes feeling less personal than companies built on the local agent model. And the Snapshot program, while great for some, can feel intrusive to others, penalizing drivers who, for example, have to work a night shift. Progressive's story is the story of the original tech startup in the insurance world. They were Silicon Valley before Silicon Valley was a household name. They consistently chose innovation over tradition, data over dogma, and transparency over opacity. They forced the entire industry to become faster, smarter, and more honest. They are one of the giants. But there is another company, one that operates on a completely different model. It doesn't advertise nearly as much. It isn't available to everyone. In fact, you have to belong to a very specific, very exclusive group to even get a quote. But for those who are members, this company is often spoken of not just as an insurer, but as a lifelong partner, with a reputation for customer service that is the stuff of legend. A company built not for profit, but for its members. That company is USAA, the United Services Automobile Association. And to understand why it consistently dominates every single customer satisfaction survey, you have to understand its DNA. USAA isn't a typical insurance company. It's not a publicly traded corporation with shareholders to please or a private equity firm looking to extract value. It's what's known as a reciprocal inter-insurance exchange. Now, that sounds like a mouthful of corporate jargon, but the concept behind it is incredibly simple and powerful. It means the policyholders, the members, are the ones who actually own the company. They insure each other. When you pay your premium to USAA, you're not just buying a policy. You're contributing to a collective pool of funds owned by you and every other member. The company's success is your success. Its fate is your fate. This single structural difference changes everything. It realigns the entire incentive structure. For a typical insurer, the less money they pay out in claims, the more profit their shareholders make. It creates an inherent, unavoidable conflict of interest between you and the company you pay to protect you. But at USAA, there are no shareholders. The members are the owners. So when the company does well, when it takes in more in premiums than it pays out in claims and expenses, that surplus money doesn't go to Wall Street. It goes back to the members, often in the form of annual distributions or dividends. Think about that. Your car insurance company could send you a check at the end of the year, simply for being a member and for the company having a good year. This completely flips the script. It's no longer you versus them, it's just us. This member-owned philosophy is the bedrock of their legendary customer service. For decades, J.D. Power has been the gold standard for ranking customer satisfaction, and for decades, USAA has so thoroughly dominated their auto insurance study that in many regions, they're no longer even included in the official rankings. They're listed separately, in a class of their own, as an acknowledgement that including them would make the competition unfair for everyone else. It's like letting a Formula One car race in a go-kart tournament. So what does this legendary service actually look like? It means that when you call, you're not just a policy number. You're a member owner. The representatives are trained to understand the unique challenges of military life. They know what a PCS or permanent change of station is and can seamlessly transfer your coverage. They understand deployment schedules and can help you adjust your policy when a car will be in storage for 6 months. They're known for going to extraordinary lengths during claims. There are countless stories of USA adjusters cutting checks on the spot after a natural disaster, of them arranging rental cars and hotels with a single phone call, of them taking the mental load off a family that's just been through a traumatic event. They don't just process a claim, they manage a crisis. Because they're not just serving customers, they're serving fellow members of their own community. And the rates? Because they don't have a profit motive for outside shareholders, USAA can often offer some of the most competitive premiums on the market. Their focus is on financial stability and providing value back to the members, not maximizing quarterly earnings. This financial strength is consistently recognized with the highest possible ratings from AM Best, which is the industry's leading credit rating agency. That A++ superior rating means they have a virtually unshakable ability to pay out claims, no matter what. So, legendary service, potential for annual dividends, deep understanding of their members, and rock-solid financial stability. Sounds perfect. It sounds like the undisputed champion, the end of the conversation. But there is one enormous catch, and it's the reason USAA isn't the answer for every single American. Exclusivity. USAA's services are not open to the general public. Membership is strictly limited to current and former members of the U.S. military and their families. This includes active duty, Guard, or Reserve members, veterans who were honorably discharged, cadets and midshipmen at U.S. service academies, and the spouses, widows, widowers, and children of USAA members. If you don't fall into one of those categories, you simply cannot join. And that is, for millions of people, the end of the story. This exclusivity is a double-edged sword. On one hand, it's the very thing that allows them to be so hyper-focused and so good at what they do. They serve a defined community with a shared culture and shared challenges. But on the other hand, it means this top-tier option is off the table for the vast majority of the population. It's also worth noting that while they are revered for customer service over the phone, they don't have a large network of local physical agent offices like a State Farm or an Allstate. If you're someone who values sitting down face-to-face with an agent, USAA's model, which is primarily direct-to-consumer via phone and online, might not be your ideal setup. So here's the verdict on USAA. If you are eligible for membership, you owe it to yourself to get a quote. It should be your starting point, the benchmark against which you measure every other offer. For many in the military community, there is simply no other choice. The combination of price, service, and member benefits is an unbeatable trifecta. It is, without a doubt, one of the best, if not the best, auto insurance companies in America. But for the rest of us, what then? If you can't get into this exclusive club, are you just stuck with second best? Are you doomed to deal with companies that see you as just a line item on a spreadsheet? Absolutely not. Because the core principle that makes USAA so great, the idea of policyholders owning the company, isn't exclusive to them. There's another company, a titan in the industry, that was built on a very similar foundation. They are what's known as a mutual insurance company, which is just a different way of saying they are owned by their policyholders, not by stockholders. They have a reputation for service that rivals USAA's, consistently winning J.D. Power Awards in the regions where USAA is excluded from the main ranking. They are known as the Silent Giant, a company that doesn't rely on catchy mascots or zany commercials, but on a century-old promise of being there for their customers. And the best part? Anyone can apply. This company proves that you don't need a military ID to get world-class insurance from a company that puts you first. The company is USAA. And right now, I know what half of you are thinking. Wait a minute. I can't get USAA. I'm not in the military. And for years, you've probably heard people rave about them, calling them the gold standard, the undisputed champion, only to shrug and say, well, that's great for them, but it doesn't apply to me. But what if it does? What if the keys to this kingdom are closer than you think? That line I just said, you don't need a military ID to get world-class insurance, wasn't a trick. It's the literal truth. And it's the most misunderstood aspect of the best insurance company in America. Let's clear this up right here, right now. Who is actually eligible for USAA? Of course, if you are currently serving in the U.S. Air Force, Army, Coast Guard, Marines, Navy, National Guard, or Reserves, you're in. If you are a veteran who was honorably discharged from any of these branches, you are also in for life. This is the part most people know. But this is where the door swings wide open. If your spouse is a USAA member, you are eligible. If you are a widow, widower, or even an unremarried former spouse of a USAA member who joined during your marriage, you are eligible. But here is the single biggest secret, the one that creates a legacy of coverage. Children of USAA members are eligible, and stepchildren. And this eligibility can be passed down. Think about what that means. If your mother or father was a USAA member, you can become one. It doesn't matter if they are still alive. It doesn't matter if you're 50 years old and they served for 2 years back in the 1970s. If they had a USAA membership, that eligibility is your birthright. And once you have it, you can then pass it down to your own children. A single act of service by a grandparent decades ago can unlock a lifetime of benefits for generations to come. Millions of Americans are walking around with a golden ticket in their family tree, and they don't even know it. So before you write them off, I urge you, ask your parents, ask your grandparents. You might be shocked to discover you've been a part of the club all along. Now, for those of you who do qualify, why is this such a big deal? Why do USAA members have a level of loyalty that looks more like a zealous fan club than a customer base? The answer isn't in their marketing budget because they barely have one compared to the giants. The answer is in their very DNA. USAA was founded in 1922 not by slick executives in a boardroom, but by 25 Army officers who couldn't get car insurance. Why? Because insurance companies at the time considered them a high-risk group. Think about that. The very people defending the country were deemed too risky to insure. So, these officers did something radical. They decided to insure each other. That founding principle is the key to everything. USAA is not a publicly traded company. It doesn't have shareholders on Wall Street demanding bigger profits every quarter. It's what's known as a reciprocal inter-insurance exchange, which is a fancy way of saying it's owned by its members. You, the policyholders. This isn't just a feel-good slogan. It fundamentally changes the entire business model. When USAA makes a profit, it doesn't go to distant investors. It goes back to the members, often in the form of annual dividends or distributions. Their goal isn't to extract as much money as possible from you. Their goal is to serve you because you are, in a very real sense, their boss. This structure creates a culture of service that is simply unmatched in the industry. It's why year after year, they dominate every single customer satisfaction survey. Take J.D. Power, the industry's most respected ratings agency. For decades, USAA has consistently received the highest scores in every category: overall satisfaction, claim satisfaction, shopping experience. In fact, their scores are often so high that J.D. Power has to list them as an unofficial winner, separate from the rest of the pack, simply because their closed membership model doesn't make it a fair fight for the other companies. Let me repeat that. They are so consistently good they literally break the rating scale. But let's talk about the moment that truly matters. When you have to file a claim. This is the moment of truth for any insurance company. It's when the promises in the commercials meet the harsh reality of a car crash. For most companies, this process can be adversarial. It feels like you're fighting them to get the money you're owed. With USA, the experience is famously profoundly different. Their members consistently report a claims process that is fast, fair, and compassionate. Why? Because they're not just dealing with a policy number. They're dealing with a fellow member. They understand the stress of a deployment, the challenges of a military family's life, and they build their entire process around that understanding. And this isn't just about feeling good. It's backed by unparalleled financial strength. USAA holds the highest possible financial strength rating from AM. Best a double plus superior. They have held this top rating for decades. What this means for you is simple. When disaster strikes, when a major hurricane hits and they have to pay out billions in claims, the money is there. There is no risk of them folding or being unable to pay. It is a rock-solid promise, backed by one of the most financially sound institutions in the world. The proof is in the loyalty. There's a metric in business called the Net Promoter Score, or NPS. It's a simple question. On a scale of 0 to 10, how likely are you to recommend this company to a friend? The average NPS for the auto insurance industry hovers around 40, which is considered good. USAA's NPS is consistently in the high 70s or low 80s. That is a score so astronomically high it's almost unheard of. It's on par with brands like Apple or Amazon at their peak. It signifies a level of customer devotion that other insurance companies can only dream of. People don't just use USAA. They champion it. So are there any downsides? The most obvious, of course, is the eligibility requirement. It is an exclusive group, and that is a core part of its identity and success. The other is a lack of physical locations. If you're someone who wants to walk into a local agent's office and sit down face-to-face, USAA might not be for you. They have a handful of financial centers, mostly near military bases, but they are primarily a direct-to-consumer company. But here's the thing. They have been mastering the art of remote service for a century. They built their entire platform to serve a highly mobile population scattered across the globe. Their website and mobile app are consistently ranked as the best in the business, allowing you to handle virtually every aspect of your policy, from filing a claim with photo estimates to accessing your insurance cards, right from your phone. They were doing digital first before digital first was even a term. So, for the millions who qualify, the verdict is clear. USAA isn't just another insurance company. It is a financial institution built on a foundation of service, loyalty, and a promise made between soldiers 100 years ago. It offers an unbeatable combination of price, world-class service, and financial stability. It is without a doubt the best choice. But this leads us to the ultimate question, the final critical piece of the puzzle. If USAA is the champion for those who can get it, what about the hundreds of millions of Americans who can't? Is there a company out there for the rest of us? A company that takes the same principles of value, integrity, and customer-first service that define USAA, but makes them available to everyone? Is there a company that can truly challenge this giant, not with zany commercials or celebrity spokespeople, but with sheer undeniable quality? The answer is yes. And that company is our final answer, the one we are crowning the single best auto insurance company for all U.S. consumers. And it's not who you think it is. The best auto insurance company in the United States, when you strip away the noise, the gimmicks, and the multi-billion-dollar advertising budgets, is Amica Mutual. For many of you, that name might not even ring a bell. You've never seen a quirky commercial for them during the Super Bowl. You've never heard a famous actor's voice telling you about their rates. And that is precisely the point. Amica doesn't spend its money convincing you it's great. Spends its money actually being great. So what makes this relatively quiet company from Rhode Island our definitive pick? It comes down to a fundamental difference in their entire business model and philosophy. A difference that realigns the entire relationship between you and your insurer. Amica is a mutual insurance company. That might sound like boring industry jargon, but it is the single most important detail in this entire series. Unlike stock companies like Geico or Progressive, which are owned by shareholders and exist to generate profit for Wall Street, a mutual company is owned by its policyholders. It's owned by you. Let that sink in for a moment. The company's primary legal and financial obligation is not to a group of anonymous investors. It's to you, the person paying the premium. This isn't just a feel-good marketing slogan. It has tangible financial consequences. Because Amica doesn't have to pay out profits to shareholders, it can do something remarkable. It gives the profits back to its customers. Year after year, for over a century, Amica has paid out dividends to its policyholders. This isn't a gimmick or a one-time rebate. It's a core part of their structure. Eligible customers typically receive a check for up to 20% of their annual premium. So while your initial quote might seem higher than a rock-bottom competitor, when you factor in that dividend check at the end of the year, the cost becomes incredibly competitive. You're not just a customer. You are, in a very real sense, a part owner, sharing in the company's success. That dividend is your slice of the pie. But the real magic of this model isn't just the check you get in the mail. It's how it completely transforms the customer service experience, especially when you need it most. During a claim, think about the inherent conflict of interest at a traditional insurance company. Their goal is to maximize profit for shareholders. And the single biggest way to do that is to minimize the amount of money they pay out in claims. Every dollar they deny you or underpay you is a dollar that goes to their bottom line. Your worst day is their best opportunity to save money. It's a brutal, cynical reality of the business. Amica's model flips this on its head. Since you are the owner, their incentive is not to fight you but to retain you. Their goal is to provide such an overwhelmingly positive experience that you remain a loyal policyholder for life. Because your loyalty is what fuels their stability and success. And the data proves this isn't just theory. For years, J.D. Power, the gold standard for consumer satisfaction rankings, has consistently placed Amica at or near the very top of every single category. Not just for purchasing but for claim satisfaction, the ultimate moment of truth. When their customers are in a wreck, stressed out, and vulnerable, Amica delivers a level of service that is, by all objective measures, the best in the industry. We're talking about claims adjusters who are empathetic, empowered to make decisions, and focused on making you whole again, not on finding loopholes in your policy. We're talking about a process designed for clarity and speed, not for confusion and delay. People who have had to file claims with Amica describe it in a way you almost never hear in the insurance world. They use words like effortless, compassionate, and fair. They tell stories of adjusters going above and beyond, of getting a check in hand faster than they ever thought possible, of feeling cared for instead of feeling like a liability. This is the peace of mind that a low price can never buy. It's the confidence that the company you pay every single month will actually show up and honor their promise when your world is turned upside down. Now, is Amica the perfect choice for every single person in America? No. And it's critical we address the caveats. First, the price. Amica is rarely, if ever, the cheapest option on a quote comparison tool. They are unapologetically a premium service. They screen their applicants more carefully, which allows them to maintain a lower risk pool of drivers, but it also means their upfront costs can be higher. If your sole priority is finding the absolute lowest number legally possible, Amica is probably not for you. This is the you get what you pay for option. It's for the consumer who understands that true value isn't just the price tag, but the quality of the product and the reliability of the service. Second, their agent network isn't as vast as State Farm or Allstate. If you absolutely need a local brick-and-mortar office you can walk into, you'll need to check their availability in your area. While their phone and online service is world-class, they don't have an agent on every street corner. And finally, while their digital tools are perfectly functional, they aren't the slickest or most feature-packed in the industry. Companies like Progressive and Geico, who cater to a different tech-first demographic, have arguably invested more in their mobile app experience. But these are minor trade-offs for what you get in return. A company financially aligned with your best interests, a dividend program that shares the profits directly with you, and a claims service that is consistently rated the best in the entire country. So we've come to the end of our journey. We've dissected the giants of the industry, from the gecko of Geico to the good hands of Allstate. We've looked at the data, the business models, the customer reviews, and the fine print. And the conclusion is clear. The best auto insurance isn't about having the funniest commercial, the catchiest jingle, or even the lowest price. It's about a promise that when you are standing on the side of a road, watching smoke curl up from your engine, that the company you've trusted with your money will have your back. Unconditionally. Amica Mutual, with its policyholder-owned structure and its unwavering commitment to service, embodies that promise more than any other company in the United States. They have built a century-long reputation not on advertising, but on action. Not on slogans, but on satisfaction. Your final task now is to decide what matters most to you. Use the knowledge from this series as your guide. If it's the lowest cost, get a quote from Progressive. If it's a dedicated local agent, call State Farm. If you are eligible, you must get a quote from USAA. But before you make your final decision, do yourself one favor. Get a quote from Amica. See the numbers for yourself. And when you look at that price, don't just see a premium. See it as an investment in a company that sees you not as a line item on a spreadsheet, but as the owner they are obligated to serve. An investment in the unshakable peace of mind that on the worst day of your driving life, you will have the absolute best on your side. That is the ultimate coverage. And that is why Amica Mutual is our #1 choice.